Moving on to the volatility side of things. So, you can see here from the drop in the yellow line, we've had a bit of a collapse in realized and implied vols. So implied vols kind of working their way lower throughout the last couple of weeks. And realized vol really back to around 50 odd, which is kind of pre-FTX blow-up levels, right, in terms of 10-day realized. So because of that collapse in realized, implies have found a bit of a floor at around 70 for now. So that's why we've got these red bars back in the positive. So you're seeing positive carry of in the order of magnitude of 20 to 25 vol points, which is quite a decent amount of carry there. Similar sort of story there in Ethereum as we have in Bitcoin. So basically, we've had realized collapse, we've had implied go down, but implied has got a bit more memory of what the hell has just happened and is not absolutely collapsing to be in line with realized just yet. So it's holding a little bit of risk premium. Okay. So for those of you who are brave enough to sell that risk premium and sell gamma and earn theta, then there's some juicy theta up for grabs right now, because most people are a bit scared to do that and would rather pay for the risk premium right now just to be protected. Okay. Now the resilience in spot prices in the face of this whole space seemingly imploding is impressive. Suggests that stronger hands maybe are happy to accumulate down here, at least in the short term. But we do think markets are fragile still, and large gaps can occur if we do get the worst sort of headlines coming out of Genesis and things like that. But we wouldn't be surprised to see some upside in the near term, given the downside momentum is diminishing, right? So we have made lower lows, but we've done it in such slow momentum relative to where we were a week or two ago and how fast we were dropping. That tends to be a bit of a bullish sign that the down move's getting exhausted. We can't accelerate on the way down, so there may well be a risk of a bit of a reflexive bounce of this market to try and squeeze some shorts out, because clearly there's a lot of shorts, and you can tell that from the various futures funding rates and things like that. Solana funding rates are negative, so it's just clearly there's shorts out there in the market, and maybe the pain trade in the short term needs to be a bit of a pop. If we look at term structure, we can see term structure collapsing, as you typically see, back towards more of a flat curve for both Bitcoin and Ethereum. Clearly, it hasn't gone all the way back down to where it was a month ago. That could still happen if things stabilize. But for it to go all the way back down there is going to require a good sort of 2 or 3 weeks of the market just being stuck and can't go anywhere, right? So I'd be surprised if that's what we get, but that it's got a lot of room still to go down. Now, the Ethereum Bitcoin vol spread has drifted slightly lower. It's still kind of humped here in that 30 to 60-day region where the highs are. That's where the spread trades at about 20 vols. And then in the front, it's trading closer to 15. And in the back, it's approaching 15 as well. So realized vol, in a 10-day realized vol is at around 19, and 30-day realized is above 30. So that spread looks reasonably well supported in the levels that it is right now. We kind of said that if we did get to 10 to 15 vols for the spread, then we'd in the longer part of the curve, back here in that kind of 6 month and longer, we'd be happy to kind of accumulate it in that 10 to 15 zone, because we think that, over that long run period of time, Ethereum should consistently outperform and out-realize Bitcoin. But it will go through periods where it realizes very similar. So that's why I wouldn't go too short dated on that type of spread trade. I'd have more confidence in parking it a bit longer dated. Okay, looking at Skew. Skew remains elevated, but well off its highs. So you can see Skew kind of down here, but highs were like 40 vol in the 1 month and 25 vol in the 3 month. We're still parked at around 15 to 20 vols in 3 month space, and over 20 vols in 1 month space. So Skew well and truly inflated and will remain that way, I would have thought, for a while. Downside risk remains. It's going to take a lot longer for Skew to normalize than it is going to take vol to normalize. That typically tends to be the case when you get these big sort of negative shocks. Spot vol negative correlation, therefore, is likely to persist with vols in that mid-range area. As we said, Bitcoin vols at around that kind of 70 area. Ethereum's at around 85. So they've got room to both go down and to go higher. So when vol's in that middle of the range and it can perform in either direction, then Skew, because we know that the impulse is for vol to go higher when markets trade lower and for vol to come back down when markets go up, Skew likely works quite well in either direction, which is why it's probably going to hold a bit of a bid. Okay. Now, a break below 15.5K would probably induce more vol buying. as spot prices make their next leg down towards that kind of 10 to 12K range that we're expecting at some point. ETH put skew is holding a premium over Bitcoin still. Obviously, it's got that higher beta to the downside, or at least it's perceived to be that way. And although the recent realized has been more in line between the two indices, between the two cryptos, the GEX model, and this is the GEX model that GVOL or now Amber Derivatives use, suggests that the street is locally long gamma for this week's expiry in Ethereum, right? So it might need this week to pass before Ethereum can really start to move again, like we're used to it moving, basically, right? So that's just something to be aware of. There might be a bit of a technical pocket of long gamma positioning that is pinning ETH to some extent, and you can see that, right? ETH seems to be kind of struggling to do much away from 1100 right now, basically, right? So whatever headlines we're getting, it's not really reacting the way we're used to seeing it react, and maybe the street is just quite long gamma, and maybe that's what's going on. Okay. All right, in terms of the dashboards, not a lot to add really. As we said, spot down 5% on the week on Bitcoin, and it's down 10% on Ethereum. We said the positive carry is pretty big, right? So you're looking at percentiles of 96% here on Bitcoin in terms of the juice that you can harvest. My strategy compass is basically saying sell puts to do bullish risk reversal, something like that. Personally, I think selling puts is a bit too dangerous outright, given that we really just don't know what kind of disastrous news can drop next. So I think put spreads are always the safer play. So if you do want to pick up some premium and you do like this price action in the short term, then you can definitely justify selling put spreads right now. There's 92 vol in the 1 month for Ethereum. If you sell that via a put spread, pick up some premium, market kind of stays where it is or grinds higher, you're going to do relatively well there. So I don't think that's the stupidest trade in the world, and it is also something that I've been employing across crypto stocks rather than the actual cryptos themselves. Okay, let's have a quick look at the flows. The flows last week, put protection was bought kind of before the break lower, in that 1400, the 14K to 15K area on Bitcoin, but some of that was already been monetized on the move down. We did see some hope plays emerging. So you saw the 31st of March, 23K call buyer in reasonable clip, and we saw a June 23, 20K, 30K call spread also in a reasonable clip. Not as big as the March trade, but not too small. We did see some sort of lottery ticket buyers as well in 25th of November upside as well. But that flow was all mixed in with all the usual gamma flow as well. If we look at Ethereum, DEC 22 also seeing put spread activity. So you can see down here from strikes 1,000 all the way down to 500. That's generally people kind of hedging, rolling stuff down, things like that. Now upside calls were bought in DEC. The 1,400, 1,500 calls were bought. The March 4,000 calls were also bought, which feel like they're miles away. So very low premium stuff there. And then an interesting trade as well that went up in huge size in like 30,000 lots was a DEC 22 March 23 1,600 call calendar, and that was a seller of that call calendar, right? So not really sure the motivation to do that calendar sale. Generally, that type of trade I would have thought makes more sense from the buy side because you're just trying to cheapen up basically a call that's in March, but you're trying to cheapen it up by selling that 16. Now, the DEC 1600s, I don't think they're worth a lot of money. I think they're quite low premium. So I don't know. That to me, that sort of calendar sale looks like you're basically trying to sell upside Vega, but without taking too much gamma risk in case the market rallies. So what you're saying is that vols are inflated. You want to sell vol. You're too scared to sell downside vol. So you want to sell upside vol, but you also don't want to sell a load of gamma in case the market has a 10, 15% rip. So that type of structure gets you short Vega on the upside without being too short gamma, and allows you to benefit from if the market does rally and vol comes off, then you can do okay off that position, basically. Right? So I think that's the motivation and why someone might be doing that trade. All right, that's it for today. Hope that was useful. Cheers, guys.